Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, March 23rd, 2019, and this is the weekly market report. In today's report, I am going to talk about the doldrums we are seeing in the uranium market and some of the what is pretty typical of what I see of a lot of retail investors, some of the communications I saw this week. I want to address some of the what I consider non-concerns concerns. So this may offend some people, but it needs to be said. I'll also get into talking about the gold market some later on in the discussion. So first of all, just to review reality a little bit, as the world continues to develop and as the ascent of man continues, the longest trend in the history of the world, the ascent of man, from the lower left to the upper right on the chart, it requires energy to do this. As I talked about in a previous discussion last week about moving from diffuse energy sources to more compact and intensive, energy-intensive sources, and the amount of energy required on this planet every year, it's going to continue to grow as emerging and frontier markets continue to industrialize and urbanize. So here's a little bit older chart that I've had in my files. I'll just throw it up here. Basically shows the projected growth in world energy use to 2040, which is only 21 years, but it's projected that there's going to be a 28% increase in world energy use. Now, it's interesting because all of these projections are all based on certain assumptions. So it's not, we know there's going to be growth, but who really knows how much growth we're going to have? So just as an aside, I'm currently reading the Diary of an Economic Hitman, and it's very interesting. I suggest you read it because it explains quite a bit about how certain individuals and companies use projections, use forward guidance in order to manipulate and designate funds to come to certain companies in the world. And I guess one of the things I took away from it is the guy that wrote the book, he used to be one of these guys that would go to a emerging market and determine what the prospective economic growth was going to be. And he was basically told by the Home Office, we want the projections to be very high. We want to really jack this up so that we can justify loans from the World Bank and the IMF and all this crap, get these countries in debt, and then be able to use that against them in order to facilitate takeovers of their assets or manipulate them politically. I guess the point is there was an interesting vignette in the book where he was working in Indonesia, and he was a young economist, and he had a guy that used to work for one of the big electrical or utilities in the United States, an old crusty 70-year-old guy, and the guy said he just would not go, he had experience in doing load projection for electrical, and he would just not go along with these crazy sellout pumped up numbers. But anyways, I guess the point I'm trying to make is that these are all projections. We do know we're going to have growth. We do know the world's continuing to urbanize. We do know that people are moving out of poverty and into the middle class, and that requires energy. And we've shown the pictures. I've shown the pictures many times. You can go online and search India, China pollution, air pollution. Go to Google Images, and you will see the smog. You will see the particulate matter. You will see how people are dying. I'm not even going to get into carbon and climate change. That just the particulate matter from coal burning and from the noxious fumes from cars and buses and these things is enough to force us to move to cleaner sources of energy. And my proposition that I made last week is that for the trillions of kilowatt hours that are required, for the quadrillions of BTUs that are required, you're simply not going to be able to do that with diffuse energy sources like solar and wind. Not even to mention the fact that solar and wind are really not, they're not on all the time. So I think, what's interesting, if you look here at this chart that I find very interesting, you will note as renewables have increased, natural gas has tracked it almost exactly on the same upward slope. And why is that? Because when you install renewables with only a 30% capacity factor, you have to have a spinning reserve of natural gas peaking plants to pick up the load when the renewables are not operating, like at night for solar, like when the wind's not blowing. You have to have these peaking units come on and burn natural gas to supply electricity. So I find that very interesting in this chart. Not only the fact that we're going to have substantial growth, but the fact that when you're talking about renewables, you're really talking about natural gas generation. So I saw a tweet this week, a bunch of tweets. I'm on Twitter, very interesting. A lot of smart people on Twitter to follow. Even if you don't want to engage in discussion, I think just following some people. There's a lot of smart guys that talk about energy, that talk about nuclear, uranium. And of course, we all know Mike Elkin. He got into a little bit of a, I wouldn't say it was a Twitter spat, it was a discussion. And what we're starting to see now, we saw the spot price of uranium come down this week. And oh, all the punters came out of the woodwork. Oh, this is, this is the end. This is, we should sell. I mean, this isn't going anywhere. You guys said this was going up, but it's not. What's going on? So, I mean, I just grabbed this tweet of Mike's that I thought was very interesting. And, he's answering a guy that, was like asking, putting up Mike's 2017 discussion on uranium and why it was such a great perspective speculation. And he said, and the guy was like, well, nothing's really changed since your 2017 talk. And Mike came back and said, well, yeah, there's been significant, production cuts in uranium, which, underfeeding's receding, separative work unit pricing is higher, conversion plant closed, China starting new builds, India major commitment to nuclear. There's just signed this week with India and the Trump administration. Inventories receding, Kazakhstan, Kazatomprom going public. I mean, 232, a lot has changed. Okay, so I think what happens is that when you're in these bear markets for these commodities, and I've seen this before, specifically like the gold market in the late 1990s and early 2000s, it was the same situation. I mean, gold prices had been down for so long in a bear market, and I came around and became bullish on it when Gordon Brown, who at the time was the kind of like the executor of the check, I forget what it's called. It's basically kind of like, a monetary official in the UK. I forget the exact term of what his position was. But anyways, he basically was selling off the UK's gold. And that was like, a major indication to me that gold was getting near the end of its bear market. And I had been accumulating coins and, not really getting into mining shares, but had been accumulating coins. Gold was selling for like 275, 290, 300. It was in that range for several years. And then it became, as it left the bear market and became more bullish, then, started 350, 400, 500, all the way up till, in 2011 when it peaked at 1900. And by that time I had participated in several multi 5 and 10 baggers in the gold market in exploration companies. So what I'm trying to say is nobody knows what's going to happen in the future. Okay. What you're doing as a speculator, okay, and speculation is different from investing, obviously, is we're speculating that there has been sufficient catalysts in place or significant sediment changes or some significant factual things like listed here on this tweet that are going to change the view towards this particular commodity and cause a revaluing upward. Now, we can all sit here and speculate if 232 is the reason why utilities aren't buying. We can all speculate that, is Kazakhstan really cutting as much as they projected? But in the end, we have contracts, long-term contracts that continue to roll off, and no one is signing new contracts, okay? and no one can really know when these things are going to happen. But we do know that demand is increasing, that demand is out there, and that the incentive price, or the price for companies to make money and build new mines, is around $50 to $60 a pound. And if the spot price is $26 or $27, no one's going to sign a contract at those prices. They're not going to, Rick Rule has a famous saying that these mining companies are famous for, mining a product like uranium for $50 a pound, selling it for 26 or 27 and trying to make it up on volume. I mean, if the math doesn't work, the math doesn't work. And what the opportunity really is that the nuclear fleet continues to grow, regardless of what certain wags or pundits seem to think. So demand is growing, but supply is not. And who knows when the inflection point is going to happen? No one knows. I think one of the things that people need to keep in mind is that you can buy the entire public uranium stock, mining stocks. If you had $6-7 billion, you could buy all of the uranium stocks. Theoretically, of course, you couldn't really do it because prices would start rising. But there's no institutional money here. There's nothing really to push this thing right now. There's no push. And we're not going to get a push until we start seeing contracts being signed, the prices start moving higher, and we start generating some, news here. And right now we're in the doldrums and nothing's happening. You can say it's 232. You can say that there's too much inventory out there. We can go back and forth. But in the end, no one is creating new mines. No one is building significant mines to replace the uranium that's being pulled out of the ground. I've talked about this before regarding oil and everything else. In the end, this is an extractive industry. If resources and reserves are not replaced, then these companies go out of business. So what happens is at some point the price will start increasing to reflect that fact. And an incentive price, not just mining costs, but the G&A and some profit margin, that's where the price will go. It will be an equilibrium price, and then we will see sufficient new material come online. But like we've talked about before, this is a 10 or 15 year endeavor for most companies. And if you're not doing this work because you have no capital or you see no reason to, I mean, we've seen interviews with some of these mining guys, and they're, most of them are stock promoters, but the reality's there. If the incentive pricing is not there, why spend a bunch of money trying to develop a mine when you can't produce profitably? So I think every day that goes by where the price doesn't go up just makes the ensuing bull market is going to be more forceful and for a longer period of time. So let's check our premises when we talk about uranium. The fundamentals are in our favor. Supply is constrained and becoming more constrained. No one's building and bringing on new mines. It's just that simple. But yet every day, nuclear fuel is being burned up in reactors, and more reactors are being brought online. I mean, I like to just go like once a week or once every 2 weeks to the World Nuclear Association website, and they have I think a tab there that's called New Nuclear. So it talks about if a new plant's being started up or brought online or construction is starting, and you see it it's in the news just about every week. Something positive is happening at some reactor around the world. Either it's being built or brought online or becoming commercial or what have you. So you can see that the demand continues to grow. Like we talked about earlier, electricity demand is forecasted to grow, especially in frontier and emerging markets. Guys, ignore what's happening in Western Europe and the United States. It's not relevant. It's not that relevant really going forward. I mean, we've seen time and time again these goofy politicians, neoliberal politicians in Europe say they're going to shut down their reactors, and then they don't do it, or they extend the time when they're going to start doing it, because you're not going to take, Germany tried this. Okay, we have a real life experiment here. Germany shut off some of its reactors and was going to go through what they call the energy transition. They've spent hundreds of billions of dollars putting up windmills and solar plants, especially in a country where it's cloudy and the wind doesn't necessarily blow all the time. And what they've achieved is they have the highest electrical rates, some of the highest electrical rates in Europe now, and they are burning more lignite coal. You should go online and look at the mining that goes on in the Ruhr Valley with these huge massive machines that just strip mine the surface of the Earth. So this is the plan. I mean, I just showed you earlier that if you're going to put renewables up, you're basically just going to have to build more. It's, renewables equals windmills, solar panels, plus natural gas peaking plants. So, I mean, at some point, the math doesn't work. The zeitgeist is changing. People are seeing through this, okay? We're seeing people like, guys on former leaders in Greenpeace, or guys that were advocates like Mike Schnellenberger, other people that were big time into climate change. They buy it, they endorse it, but they're all seeing nuclear as the path forward, because no one's going to want to live a hobbit type lifestyle, scratching a existence out of a backyard garden with candles and no refrigeration, air conditioning, or heating. It's stupid. People want modern conveniences. They're energy intensive. We have all these billions of people up and coming, and nuclear is the solution. So, maybe not the next month or two, but, this is an inevitability. It is a when event, not an if event. Just like I just said, attitudes toward nuclear power are shifting from negative to positive as many see the benefit of zero-emission baseload power. And I don't even like talking about anything except for baseload power. I'm not interested in talking about wind and solar with 30% capacity factors. You're just talking about natural gas peaking plants. I mean, look it up. It's and then people, I don't want retorts. Don't email me about batteries and vanadium redox. I know all about this. Where is it being deployed in massive scale? Where's the scale? Where are you going to get all the vanadium? Do the math. It's a math problem, guys. Again, where are you going to get all these minerals, and where are you going to get all this copper? Where are you going to get all this stuff? As I've said before, renewables energy is great. You're right. Solar and wind are renewable, but the machines and devices that are used to capture these diffuse energy resources, they are not renewable. I mean, there was a huge article out of China this week where, they're even in China, they are now wondering, what are we going to do with these millions of tons of solar panels once they reach their useful end of their life, which is about 20 years. Okay, what are you going to do? They're very, very difficult to recycle. You're just going to throw all this stuff in landfills, tons, hundreds of thousands, millions of tons of solar panels with cadmium and other heavy metals. I mean, what is the plan to recycle these things? I mean, I've seen the repowers that go on in wind. What do you do with the fiberglass blades? Well, they just take a big shear them up into sections, and dump them in a landfill. I mean, this is sustainable? I don't know. So, getting down here to some things now of my personal views, it's like, if the fundamentals have not changed but gotten better, yet the price has dropped, wouldn't that constitute a buying opportunity? Yes, I've been in there buying the names that I like. I think this is a once in a generation opportunity. I think that the Fukushima accident really put the brakes on the previous uranium cycle. The investments have been in new mines have been put on hold, and the gap, it continues to grow, investment gap. It's just like any other commodity. You have to continuously replace, as I've said before, what you extract, and it goes in a cycle. And if you are increasing the amount of demand but not increasing the supply, at some point that creates a problem, and you have a spike in prices. That is the theory. That is what we feel is going to happen as speculators. So don't complicate it. I mean, this is where the real problem comes in. Most people that are, especially retail, inexperienced speculators, and you're not investing here. This is not investing. This is speculating. Sitting and waiting for the fundamentals to change is boring. That's really what it comes down to. Nothing's happening. I'm bored. I want to do something. Okay, what do you want to do? I mean, these things take time. No one can put a definitive time frame or date when this thing's going to, the inflection point's going to happen. If you understand the fundamentals, if you have conviction that you are correct in your analysis, and you shouldn't, investing and speculating, guys, is a personal endeavor. You have to personalize this. You can't rely on what I say or what Mike Alkin says or what all these different people on the internet say. You can take our analysis, you can take our views, you can take our research or our opinions, and then you can incorporate that into your own thought process. But ultimately, it's your decision and it's your money. And you have to understand, how much risk you're willing to take. If you, your analysis leads you to believe that this is going to happen, how you position yourself. You can take more risk, you can take less risk. These are not questions that somebody else or something that you can outsource, like if you have a clogged toilet or you need a new roof. You can't just hire somebody to or get somebody to do this for you. You have to personalize it, you have to take an interest in it, and you have to decide for yourself. But I understand, being in my early 50s now and doing this for 25 or 30 years, when I was younger, I wanted something to happen. Man, I'm convinced this is going to happen. I get it. It's going to happen. Why isn't it moving? Visions of sugar plums and unicorns and me sitting on beaches in, the Bahamas. When is this going to, when is this going to change my life? Everybody tells me this is going to happen and I can do the math. Well, I mean, no one can tell us that. No one can certify that's going to happen. We could have a nuclear accident over the weekend, and it would put the hiatus on this for another 5 years. So anything can happen. So what I'm trying to say is that don't become anxious. It's boring, and this is really going back to what Jesse Livermore said. He always said that it was the sitting and waiting that made him the most money. If you have your view, if you have conviction, if you have analyzed it and you have convinced yourself of the risks and the rewards, the pros and the cons, and the pros outweigh the cons, and you take your position. If the price drops and the fundamentals haven't changed, well, my advice is you should be buying more. But that's just my view. So moving on to another thing that I wanted to talk about. It relates to gold, and basically the Fed caving on rates, and is it positive for gold? I mean, basically in the Fed statement that came out, there will be no more rate increases this year. Okay. They're also going to slow the balance sheet tightening, which they were doing, the $4 trillion in the balance sheet they were running off. And so now I think we have to take the view that, what is the new normal? That monetary policy will never be neutral or tight again. I mean, we had that 20% drop in the market, or 15-20% drop in the market in the fourth quarter, especially in December of last year, and that really panicked the Fed off of, raising rates. So I think that we have entered an age of permanent stimulus, kind of like Japan is in. And, what would, if you can't raise rates now, if you can't tighten the balance sheet now, if you can't normalize things now, when this economy is supposedly growing, when are you going to do it? In the next recession? The other thing I wanted to talk about was President's Stephen Moore appointment to the Fed. Mr. Moore shares Mr. Trump's view that America's monetary policymakers are too hawkish. That's from The Economist magazine. That's exactly right. If you've ever seen this guy on TV, man, he is just anti-Fed, and he believes that, they should just be loose money all the way. So I think that this is going to be interesting to watch, because I think we are entering a new era where we're not going to have a choice but to become more loose with monetary policy, which I believe is going to ultimately be inflationary. The deficits are huge. As I point out here, we have the biggest budget gap in the history for the month of February. This is a new record, and it's during a supposed growing economy. I mean, what's going to happen when we have the next recession? I mean, we are going to have a recession, and you have automatic spending stabilizers that come in place, plus tax revenues will collapse. And we're going to be looking at $2 trillion deficits. Who's going to buy all these bonds that the Treasury is going to have to issue? It's my view that you should, I think this will never happen. The United States government should just default on its debt. They should come out and default and say, that's it, we can't pay this, we're not going to pay it, and just default on the debt. You know, it would do several things. It would punish the people that loaned money to a bankrupt and corrupt government to facilitate all the bad things that the U.S. government does. It would also preclude the United States government from, you know, for probably a generation from re-entering the bond market and running up deficits again. But this isn't going to happen. What's going to happen is that we're already starting to see it. The zeitgeist is changing. Modern monetary theory, these goofy views that you can just print money and, you know, just spend money in ad infinitum. I mean, I was just recently working up in Illinois. I mean, they're raising taxes again up there. The state is basically bankrupt. I mean, what ultimately is going to happen when you have a more progressive leadership in Congress, and God forbid if you get a progressive Democratic president in Congress? I mean, these states are going to go to the federal government and look for bailouts. I mean, they have no choice. So, you know, free everything for everybody. You know, the Overton window, the conversation is moving to these things. That they're even being talked about should be telling you what the future is going to look like. So I think this all bodes well for gold, maybe not in the short term, but in the medium and long term for sure. And I think that people should be looking to, you know, add certain shares and gold bullion to their portfolio. I think you have to protect yourself against these deprivations of government. I don't want to go on an anti-government rant, but it is what it is. It's the history of the world, and they are going to destroy the currency eventually. It's not going to happen in the next month or two or the next year or two. But, you know, what else are they going to do? How are they going to pay all these benefits that they've promised, all these pensions, all the Social Security liabilities, Medicare liabilities? I mean, it's going to be a combination of things that are not good. And it's going to lead to a lot of debasement of the currency. So I think in that kind of context, you have to be looking at gold as a way to diversify and protect yourself from these things. So I'm going to have more to say about these things. We're going to have to really watch what's going on. But, I mean, that's where we're at. So that's it for this week, guys. Appreciate you listening. Look forward to the comments, and we'll talk to you next week. Thanks.